Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So let's move into the Forex calendar. So yesterday, holiday, at least for certain chunks of the planet. Today, be interesting to see what the shakeout is from these OPEC meetings. I really haven't gotten a lot of news breaking on it, although I do find it interesting that there's been some jet airlines diverted in Europe and some foreign nationals taken into custody and just crazy stuff going on in right on the Soviet border. Wonder if that affects oil at all. So Bailey speaking today, it hasn't been too crazy. I mean, a lot between a major holidays and kickoffs to a large travel, which, you know, many more are traveling because they've been stuck inside for a good chunk of the last year, depending on the area. A lot of wanting to get out and see. So I think some of the volumes would be a little lighter. But, you know, with the risk of lower volumes also comes the potential that with a smaller liquidity pool, if you will, games can always be played by whatever big high frequency trading system or algo, maybe hunting through the market looking for its next group of victims. So please don't be that victim. Just be aware of that. So looking at Wednesday, Italian bank holiday tomorrow, which is the second, today's the first. Looks like we've got a whole bunch of new subscribers to Auvoria, so welcome. This is a call I try and do on Tuesday and Saturday. Recordings are up in the cloud and the link is in the chat window. So if you guys want me to take a look at any individual currencies today, please let me know. I'll go through just a couple of them, but not really much has changed since the Saturday call because of the holiday, obviously. So that is the calendar. I am going to talk a little bit deeper about the Bitcoin chart today. I'm going to show you some varying degrees of research beyond what I just show, which is tradingview.com. That's what you're looking at right now. This is actually really good software. This is a pro version. It's about 15 or 16 bucks a month, depending on where you live. It's actually really good stuff. And what I've done is just overlaid 3 different moving averages. The 50, yellow is the 100, and the 200 is the simple, is the red line. Each of these candles represents a single day, and we're looking at the Qs. So take a look at the S&P, again, bouncing around, basing, if you will, inside an upper range, peeking our heads above this area and pulling back. Moving to the DXY, hanging on the edge of the cliff. I don't know, would you call it that? The precipice of the edge. So there's a chance that if we get through this area, which looks like likely, it could be in a fairly swift fashion, rip us down maybe a full dollar real quickly. And then I would imagine us to probably hold for a bit and then possibly sail off down into what you need to go to a monthly chart to see of where we were down into the 85 area, which is almost 4 full dollars, or and hell, even closer to $5 down lower where we currently are. And then ultimately heading off to the 80 area, which we have some exceptionally strong support in from 2013 through 14. So what does that mean? That means that if you are accepting trades in any of the majors, do know that the DXY will probably have a rippling effect into things like GBP. Let's drop back to daily. This will probably continue higher, right? It's really been in a very tight range. Nothing because of, I would imagine, holiday. I would imagine, people traveling, lower volumes, and or it's looking to take its cues from the dollar. But if this does start moving, we're probably going to zip up pretty high. Looking at the weekly on this, This is the area that more than likely is going to be in a tractor right up in this 43, actually almost the 4,400 area, I would expect would be the next stop fairly quickly. Always tough to accept trades long, or I should say in this particular case, always easier to accept trades long, much more difficult to accept trades short as we break out. We're looking at the Euro USD, same thing. Let's go to the daily chart first. This is the grand scheme of things here. We're moving up each area and a much more broad basing pattern going on. Again, I assume looking to take its cues from any move lower in the dollar. Be much less likely as a trader to accept any shorts if we start ripping above this area right here. It's all 2325-ish or 2300 area. Aussie CAD, it's the next request I got. Daily first. Here's the support line. We're on it, in my opinion. Big area of support since like a year ago, right? We're right there. Aussie generally strong up until March relative to most currencies from the bottom of the demic. And then it's moved, just moved, essentially moved back down. But the support really is right here. If we take a look at weekly, just to double check our math, if you will, we're at the edge of this. Still think there's going to be some support for this. We could spend some time here. Who knows? We could spend another couple of weeks here, right? So if in fact that's the case and we're holding this, it certainly is more likely that but I think the problem with really getting deep into anything Australian wise in terms of macro, you're going to be better just following up on a lot of the news coming out of the area, what some of the Fed governors are saying in some of these other countries and their central bankers, because I think there's just there's too many anticipated problems with China right now. Australia is a great country. It's very rich in natural resources, which China absolutely needs. And they've been playing games with them. So it's been very hard to make any kind of forecasts other than just be on alert, because anything said by the CCP could certainly send this lower relative to, making it tougher, if you will, for the Australians. Let's hope that's not the case. But weekly, just in case, yeah, I'm seeing the monthly's holding their level. Support area on the monthly, weekly, and daily. We're on the edge. Just keep on alert on that if you're accepting trades on this dog. Let's see, USD JPY. Same base we've been building. Let's make sure we're on the daily first. Same base we're building. Look at the weekly. This is resistance up here. Now, in this particular case, this chart, if you look at the weekly, we've been in a trend up, right? This is broken from most of the dollar major pairs out there, right? Why? Because the end's been weak. And this looks like a flag formation, quite frankly. So it's looking like it's building out some sort of a flagging formation, which in an uptrend is typically bullish, but it's just this is one of the more difficult ones out there, other than just understanding where support and resistance lines are on anything from daily to weekly, which we're looking at now. Take a look at the monthly. Notice you can see the zones that line up with almost every other support and resistance zone on both the high side and the low side. This whole 1360-ish area. And then on the low side, 102.72. That's sort of the line in the sand. Even though there isn't much read other than just we're balancing out, at least from a monthly standpoint. If you go back to weekly, it's just a bigger snapshot of the same kind of looking picture. If you drop to the daily, It's a more concentrated view right here. One of the questions I did get last weekend, I did not get a chance to understand, is why I don't zoom in. I actually don't like drawing. You know, a lot of people you'll see in these types of presentations will draw a box around and then just blow the whole thing up too. I don't want that, because I want you guys to always be able to look to see what the patterns were that took place, right? And I've talked exhaustively about this whole trend down that took place, and then we cracked it right here, right? And then this is where the institutional money signaled that it's coming in, because we came back down and tested the top of this trend line right in this area here. And then notice as we began to move slightly higher, you had much bigger volumes come in. This is typically the institutions getting caught off guard and or somebody giving up the fort, as we like to call it. They just, just jumped off their post and then it just ripped, right? This is typically something I will almost never, if I had a MAV version of the software, be accepting a short on, because it's going to usually just zipper through this whole area, which is just a sophisticated term for a rip. It's what's called a face rip. Okay, so you don't want to be caught in the middle of something like that. Just knowing that it's going to come up. All right, so let's take a look at the GBP CAD and the request for that. Always start off with the daily, in my opinion. Real tight range. Broadly speaking, right? You can see the whole lift up. Pound's been strong to, I should say pound's been quite strong relative to most currencies, not the Canadian, because it's been slightly stronger, all but not recently. Notice March was that cap event in many of these majors, and the change in the trend changed to a trend down, which you can almost draw perfectly trend down lines on this. So we're continuing to move into the trend, but this whole 6,800 area is really the edge of the cliff, in my opinion. So if you go to the weekly, which may be a little more clear, notice it's a full base lower right at the 6,700 area from a weekly chart. If you take a look at the monthly, it's a bigger, broader range. So 1.8 to 1.6 on the downside is your larger range. So just keep this in mind as you're looking at all these. But you really do, all in terms of the daily, this is where you want to focus. Now you can be accepting trades on both sides of whatever shot out to you, right? All right, question. What is the best way to do fundamental analysis? Why would we reference supply demand chart you share? Would we reference that supply demand chart you share with us? Supply demand, you talking about in terms of the volume profile chart that I've shown? Is that the question? If you have, I'll give you an example to be a little easier to do this. Let's just take a stock. Let's take something everybody knows. Here's Apple. You can do fundamental analysis on Apple by just using basic metrics. If you have TradingView, you can see the earnings, you can see everything. One thing I do like about them is they put in the actual, versus that. If you're talking about fundamental analysis on anything else, you're basically talking about ratios, financial ratios, stuff that I don't ever get into discussions with on these calls, because most people's heads would spin off their shoulders, and it gets quite involved. But there are a number of free services out there. Necessarily consider TradingView to be free, but for $15, it's pretty affordable. You can do a lot of fundamental analysis on stuff. The best fundamental analysis I try and do, and this is more of a collective type of fundamentals, but you can always click on more financials when it comes to Apple. You can see everything. So if that's more of a stock question, I would direct you towards Investors Business Daily, IBD. Oh, yeah. You're talking about the supply and demand charts? It's actually some good stuff. Let me show you that. So you're talking about these charts? Just so everybody knows when this is the, it's easier to see. These are my weekly notes that get posted. I don't know if you guys are looking at this, but this is in the AP Live back office. What I do look at here, there's a lot of stuff that's been put out, but if we're talking about the FX Street stuff, you can click on that link and it'll take you to the site. Is this what you're talking about? Okay. Yeah, so let me just post this because it's kind of convoluted here. I'll put it up to everybody in the chat room. If you want to bookmark this, you can see it in the notes each week. But I just look to check. This is really just a sentiment tool, right? The problem with this is that, and I don't really talk a lot about sentiment in Forex because it is, one, it can be completely messed with, right? If you will. Two, it's not all that respected among the big institutional desks, right? That's key. Whereas, somebody wants to look up the rating on a mutual fund, everybody agrees that Morningstar is the best, right? They have one of the best databases on the planet outside of Bloomberg. And you can use the Forex cheat sheet too. Yeah. Here's the, just to make sure we're covering this. This is the Forex cheat sheet. I know this can seem kind of confusing, but I've always loved this, even though this is a bit of this is an older piece I took out of a textbook from many years ago. Nothing's changed. So, the complete inverse correlations between everything. This is basically like a macroeconomic analysis in one sheet of paper. Because this was something we used to study for all the exams in macroeconomics in college. Yeah, you can utilize all that stuff. Keep in mind, these notes are really good. I've been adding to them with different stuff other than just updating what's going on. Typically, I will note in these notes if something big's developing, right? I'm not going to go through each day. So I talk about a lot of that live, but most people know to stay out of the way of red folder events in terms of news, right? But if there's something coming up that's like really outlandish, like we've broken a monthly chart support for, let's say, GDP majors, I'll note that here that we've broken that because it's just not going to be risk management and acceptable for you guys to step in front of a freight train, right? Just go with the trade. Don't be taking trades against it, whatever that particular prevailing wind is. Right. Let's take a look at crypto. So here's a general Bitcoiner chart. Okay. This appears to be flagging to me. This is the daily here. Okay. Always check to see the year. Starting off with the daily, in my opinion, first. We're flagging here, which means that we're probably going to be going down. I'm actually thinking this 22,000 area, which is where the original true breakout was. We're probably going to sail back down to this area. So whenever I do this type of work, I always know that I could be wrong. So I check my analysis against a couple of the best out there using different databases, right? So here is Axel Cabal's analysis. This guy is actually phenomenal, an analyst. He's in Tel Aviv. He sees the same thing, right? Here's the year-long average. Here's the, we're bounced essentially off of the year-long VWAP that he has here that I introduced last Saturday, the volume weighted average price. The support obviously here, but here's another one that looks to see in what's called a sequential. So I'm not going to get too involved in this with you guys, but this is a Bloomberg screen using what's called TD, which stands for Tom DeMark. It's an algorithm that counts waves. It's a lot of hedge funds use. And anytime you see a 13, you know that we, could have an exhaustion and begin to move back up. But no, in this particular case, downside sequential 13. So just skip all that if you're confused, but just Now looking for a corrective upside wave 4, which would make sense, right? A breakout of that flag we're building. And then a lower low downside wave 5, which finishes out the move. How far that wave 5 goes, how long, how deep, it's nuts. But one thing I actually will show you, if I can dig this up, I have this in my Google Photos. If I can drag this over. I didn't upload that, did I? Because I think this is just a ridiculously good piece. I'm going to share this with the cloud so I can show you guys up on from my phone. And essentially what I'm moving is it's a chart of all the corrections historically in terms of Bitcoin. Because I think it's from a risk management standpoint, it's always important to understand where there's been a correction and whether or not that correction and to what degree that correction has any effect on it. So there we go. All right, let's see what we got here. All right, can you guys see this okay? Just double check the share. All right, okay, there we go. So historical Bitcoin correction. I'll put this in the Telegram channel. I thought there was a great question asked, and believe it or not, in a usually the comments on a lot of this stuff is good for comedy and nothing more, right? Other than but one of the comments said, when was the last time you've had such a huge correction like we've seen in Bitcoin that we went back and made new highs in the next 7 months? And the answer is 0. So, and even though there were a lot of people that brought in differing opinions on, the answer is 0. So know that once you have a big correction, understand it. These corrections here, in many cases, we've seen 1, 2, 3, 4, 5, 6, 7 corrections of more than 50% or right at 50% and more. So just know that these kind of corrections happen if they can correspond with some of the chart stuff I've talked about. Maybe this thing settles out at 22 a coin, right? And that is the end of wave 5. That is long-term support and resistance. Then it has merit in terms of some sort of balancing or basing pattern that's played out. It's much better to enter any kind of investment, especially something as volatile as crypto is, at a good entry point. Many believed that good entry point was right here at 30. And I think just based on this flag pattern forming, many of them are going to be proven wrong. And as soon as we get under 30, it's going to puke. Now, I'm not saying to buy this in the puke, because falling knives can just slice you open. And you want to be careful about that. You want to let a pattern play out. I don't know that's going to happen. I mean, ideally, that's what you want, right? From a risk manager standpoint, in buying any kind of instrument, right? Stock, commodities, real estate. I mean, it's all you want to see in any of these Forex charts, right? So if we look at the Bitcoin chart that I show, basically looking for an entry right where we had liftoff here at 22. If we viciously move into this area, I'd maybe put 1/8 of my normal size into this trade. Everybody's thinking, well, why? Why so small, right? Because you just don't know, right? That way, if you want to eventually put a half position in this, which is about the most I'd recommend. So if somebody's got a total of 200 grand invest, right? Or let's make it easier, 100,000 to invest. They have different investment stocks, 401ks, retirement accounts, whatever. That means that I'd have no more than about a 3% position inside this, and that's 3 grand. So do the math on that relative to your investment size. And even though that sounds like a small participation, that if I'm wrong, you're not going to get clobbered as things drops even lower, right? It's just too dangerous with a lot of this stuff. Now, if you have, thousands or hundred thousands of dollars to invest, I still don't think you go full bore in this, because I know for a fact a bunch of people that I've completely went against the grain on and told them they were nuts for getting in up here. They did. Now they're 50% off in where they bought into, and in most cases are a little bit less, but they could be much further down into a hit. Whereas I'd rather just be patient, knowing we have these historical hits, right? For the request to re-show this piece here, this is the historical corrections in Bitcoin from the all-time. I'd rather be a buyer down in these areas. It's very small size, right? If the thing got absolutely crushed down into 4K a coin, like we saw last summer, maybe I'd be a little bit of a heavier position buyer, right? Because we've seen an 86% correction, 82, this one's 80, right around low 80s. And people that bought at these points and held, they got paid handsomely, but their small positions they took in most of the most risk management situations paid off for them handsomely. And then for those that really completely swung for the fences, they got paid off a ton. So just know that. All right, so let me open up. I had to minimize a whole bunch of windows here. All right. So that is the discussion on Bitcoin. I'll maybe add some more to this as we go over time. Yes. You're welcome. Thank you. We try hard to find some different stuff, so it'll all be good. Yeah, no, the question I got, this is the Google Photos cloud. So you can go up into the cloud here if you have Android-based devices like we do, and everything just pulls right off the S21 phone I have and goes up into the cloud. All right, what else? Here's Ethereum. Let's go to the daily first. So notice this is a slightly better formation, but still looks like it's flagging out to me. Maybe not as ideal. Dropping down, probably this one has really ramped, and the argument between this thing is more of a store of value or like an XRP, has given some lift to this stuff. But again, I'd rather be a buyer down where these support levels are 1100, and then ideally just like Bitcoin where the liftoff took hold. It's basically 2/3 lower than where it is right now. It may never see that point. It could. That's when you load in your last piece. I also don't want to talk about. Don't get as caught up as much into this stuff. But if you guys are truly bored and you're looking for a ridiculously confusing book, you can Google Tom DeMark. Guy's actually a genius. He's also a very rich guy. He developed all this stuff and he sells it to Bloomberg and CQG, and some of these damn indicators are $600 a month just as an add-on. So much more easy to see, just looking how a head and shoulders formation plays out. Okay, maybe not the best example of that, but you have the first left or right shoulder forming, right? Then you have a head position. That's usually a higher point from the shoulder. Typically, you want to see a descending line a little steeper on that, and then a lower right or left shoulder, whichever you wish to call it, at a lower point, albeit not by much. Then we have a little bit of a sail down to what's called a neckline, right? Which is essentially what this is. Once you crack that, and then you have a lower move and you flag, or any kind of triangle is typically in a decline, a bearish chart type, which I posted a lot on. And then eventually we'll go back down and would assume to 30K. There'll be a lot of nervous people right here. And you guys will be like, yeah, Federal warned us on this shit that it could completely crack through this 30K area. And then if we go down here, this is where terror is going to set in. And you typically want to be a buyer when terror is setting in, right? but just be careful on catching that falling knife. Same chart pattern plays out on many, many different types of instruments. It played out on Amazon in the early 2000s. It played out on Apple multiple times in its life. It's played out on NVIDIA and all the big movers out there that have been clobbering it. And, I'm not just speaking of tech. You can do this type of chart pattern in any kind of stock, whether it be in, pharmaceutical, chemicals, anything in energy. These all look the same over time. The point is just recognizing the pattern. Maybe if you want to get long it, certainly if you're getting short, you're happy, right? You crack the neckline, you're short, you see the flag forming, you maybe took some off the table on this first reactionary move, and then you're waiting to take more off the table once we get into what I like to call terror stage. And this is where a lot of people just seeing tremendous amounts of wealth evaporate and their emotions start just terrorizing them. As I often talk about in many of my past webinars, the inner monkey, right? I always joke about that. If you ever want to see some funny stuff, just go to YouTube and dial up Samsonite luggage commercials from the 70s where they show them throwing this suitcase into this cage within a gorilla, and he's jumping all over it and he's jumping up and down. And he can't break the thing open, right? So this essentially is your brain when you're trading. And don't let the monkey essentially bust inside your suitcase and get to your inner monkey. So that will be the presentation today. Tune in twice a week to hear me talk, and in some cases drone on and on about useless subjects. But hopefully you guys are getting some good nuggets out of this. Do recall the switchover we wanted to see from our old Market Watch channel, which we did not have control over, to this new channel. I still don't have the subscribers, so I know a lot of people haven't migrated over yet. So get the word out. I don't post on the old Telegram channel. We can just post on this one because we have full control over this channel now. And that way we can keep you guys safe. But I'll go ahead and post this chart in there, and everybody have a good week. May the trades be with you.